All right, you don't want to be investing in any crypto project on the block. Let's talk about what tokenomics is, and let's talk about how you can spot sustainable projects and avoid some common traps. Avoid rug pulls and avoid you just losing bread for no reason. We'll cover supply mechanics, distribution, vesting, demand drivers, liquidity, on-chain signals, red flags, and reproducible due diligence checklists. Let's head on to it. So what is tokenomics? The economic blueprint of a token. Tokenomics describes how a token is created, distributed, and used. Supply and demand, incentives, and governance mechanisms shape long-term value. Think of tokenomics as the token rules of the economy for an on-chain asset. Okay, so it's extremely important to know the formality and the fundamental research of a crypto project. Understand what's uses for. Okay, say Bitcoin, for example. Okay, Bitcoin, there's 21 million Bitcoin. Okay, so Bitcoin is a limited resource. Okay, making it like a virtual diamond, for example. Okay, Solana, Sol, you need it in order to trade meme coins. Okay, know the fundamental reason why you're trying to invest into a coin. See if it has any future use, and if so, make your decision based off of that. Take your time. So let's talk about some core components. What to inspect first. So supply, max, total, and circulating. Emission, schedule, inflation, and deflation mechanisms as well too. So distribution, the team, the investors inside of the project. Okay, the investors are going to be extremely important. Whoever's investing, okay, is going to be whoever's supplying bread to the house. Okay, whoever the party is supplying the money, okay, that's going to be whoever is going to be extremely important. Okay, who's investing into it? Are big companies investing into it? Are government bodies investing into it? Are hedge funds investing into it? Do your research. Treasury, the ecosystem of it, airdrops, percentages, who owns most of it, okay, investing. Utility and demand, what real on-chain use or fee sink exists, okay? What use does it have? And incentives to government, staking, rewards, and voting power allocation. So supply and key metrics, some numbers that matter. So circulating versus total versus max supply. Never assume that total equals circulating. Never. Market cap, okay? Market cap is going to be extremely important to look at. Okay, market cap is pretty much the number that's going to depict if something is valuable. Okay, something could have just dropped and have a low market cap, but if it becomes valuable over time, the market cap should increase, inshallah. Okay, but something with a high market cap means that something is valuable, means that there's a lot of money into it, means that there's a lot of volume, means that there's a lot of people investing into it. Okay, so something with the high market cap, a lot of the time is going to be something where a lot of people are putting a lot of money into it. So market cap, and the way to calculate the market cap is circulating supply times the price, okay, and the FDV equals the total supply times the price, okay. And high FDV relative to market cap can be a red flag if large unlocks are coming. So emission schedules and inflation, how new tokens enter the market. So check emission schedule linear, having epoch-based or unlimited, okay? And model for supply growth and affect price if demand doesn't keep up. See if the crypto project is going to be unlimited, okay? Or see if it's going to be limited, okay? Do your research. So distribution investing. So who holds the tokens? So team, advisor percentage, and vesting cliffs. Short or no vesting is risky, okay? And look for gradual unlocks. Instant unlocks are going to be a major red flag. Token utility and demand. Why holders keep or use it, okay? And utility examples, the protocol fees, government, staking rewards, deflationary burns, and premium service access. No utility, the token may be purely speculative. What use does it have? Do not invest in any meme coin or anything like that if it doesn't have any future value. Doge turning this into an entire government entity, okay, due to the fact that it's created by someone who has value, okay, perceived within the societal world, okay. something that's innovating new technologies. Okay. Is the cryptocurrency helping human beings? Is the cryptocurrency advancing humanity forward? Okay. In what way? If so, then make your decision based off of that. Once again, though, no utility, go ahead and forget it. It's going to go ahead and pretty much be useless. You're going to be investing into nothing, waiting for the price to go up when no investors are going to be looking at it because it doesn't have any true functionality. Try your hardest to invest things in tokens that have functionality. Okay. Once again, Bitcoin's functionality is that it's a virtual diamond. Okay. Solana used to trade meme coins. Ethereum is staked. Okay. And it's also used to create NFTs on the DeFi central network. Okay. So the DeFi decentralized network is going to be run by Ethereum. Okay. So that's what makes Ethereum popular. Okay. There's going to be a lot of examples to why the cryptocurrencies are going to be used. Okay. Just to figure out why, go ahead and do your research. Liquidity and market structure. Okay. So can you enter and exit safely? Okay. Check the liquidity pools, exchange listings, and on-chain depth. Lock liquidity and audits reduce rug pull risk. Okay. Make sure that there's locked liquidity a lot of the times because you don't want to be getting rug pulled on. And what a rug pull is pretty much just a group of individuals who go ahead and start a coin. Okay. A lot of the times they try and either A, run ads, or they're going to go ahead and pay influencers on Instagram or X or something like that. And then from there, they're going to go ahead and get in at the bottom of the coin. Okay. Trying to promote the coin with ads and false hype. Okay. They're going to get in at the bottom of the coin. You're going to be able to see a large percentage of who owns the coin too. A lot of the times it's going to be the people who own the coin at the bottom. Okay. As soon as the hype comes, people start buying. They're going to go ahead and sell at the highs, making a percentage because they are in at the lows, selling it straight down, and it's just going to go straight down because it doesn't have any real perceived value. Thus, only people who created the coins making money, and everyone else who got into it got what's quote unquote rug pulled on. So, are the rewards sustainable? Okay. High APRs paid by printing new tokens are inflationary and prefer rewards tied to protocol revenue or usage. And governance and control. Who makes the decisions within the cryptocurrency? Okay. Or the token. Distribution of voting power matters. Few wallets controlling upgrades. Okay. Equals centralized risk. Check multi-sig setup for treasury control. See what broker it's on. And token velocity. The circulation speed definitely matters. High velocity equals a fast moving tokens with a weaker price support. And staking locks reduce velocity, but they can go ahead and stabilize price. And burns and deflation. So permanent supply removal. Recurring burns can support price, and one-off burns may be marketing. Verify burns on the chain. Security and audits. Technical trust. Read full audit reports and not just the audited badges. Check for historical exploits and unresolved issues. Okay, don't just invest in something that's going to be exploitable. Okay, it does not function. Okay, and has had a reputation to where things just aren't being cleaned up within a quick manner. Even if things happen, everything's going to happen. Every failure is going to happen within a company. Don't just downplay it off of that or a token. But if the issues continue to consist over and over and over and over and over again, then you can go ahead and forget it. And red flags. Immediate project killers. A huge team allocation with no vesting. Okay, once again, that group of teams, like I told you guys, who sit in the Discord, okay, promoting with ads, okay, with Instagram, sometimes even hacking influencers. Okay, if you ever see an influencer get hacked and post a coin, don't think that it's real a lot of the times. Okay, and unlock liquidity, owning, minting functions. An anonymous team, no audit, and hype-driven marketing. Okay, used by ads, social media influencers, and just posting things with no value just so they can make a quick buck. And a lot of the time, you're not going to make anything. especially since you're going to be able to get in at the highs, and all this copy trading and stuff like that. It all has to stop, and just take your time, study the chart. And I have free education at stackmo.net you can check out, and even speak to me for free. So let's give a deep dive on the white paper. So for the white paper, find the allocation table, the emission schedule, token utility section, governance model, and cross-check numbers with on-chain data. And on-chain and off-chain signals. Verify the claims. Check holder concentration, whale activity. Well, whale activity is people putting in large amounts of money, okay, into one thing, okay? So into one thing, that's what it is. Whale activity is large amounts of money being put into one trade and large unlocks, okay? Team LinkedIn, the partnerships, and the community help with the tokens too. So see if the token is actually valuable, see if it has a community around it, website maybe, and think like an analyst. Compare the market cap versus peers, okay? Market cap is going to be a good depiction to determine as how valuable something is. Check it out versus its peers, okay? Sometimes you can't get in at the highest market cap thing because it might be expensive to invest in. You might want to catch a more valuable play and catch the market cap on the way up, okay? Do that. Just study it, study the volume, and just take your time. And stress test assumptions about demand and supply growth, okay? So don't just hop in a trade, really take your time. Do your research, see if the levels are working out, and then go ahead and throw your bread. So practical chess list, okay? Try and read the white paper and the allocation table, see if the cryptocurrency or the token is real. Verify the contract, that's a circulating supply, making sure there's value, making sure there's always buying and selling happening. Okay, audit reports and treasury controls, vesting dates and liquidity logs. Community and GitHub activity is definitely going to be a big one. See how people are talking about it and see if GitHub is being used with it, and model emissions versus demand. So you can head over to stackmo.net and set up alerts for unlock dates and size positions relative to liquidity and risk, okay? And summarize the key metrics and risk all together. Love you guys so much. Stay prayed up to God. Keep grinding. Peace.